a lot of people have been contacting me lately. Why is gold going down? It's going down. You said the end game's coming. It is. It is. If gold is revalued to 20,000, 30,000 by statute, then the prices of bonds collapse because the interest that they pay becomes almost meaningless. You have to bring up
Right.
the interest to have it be worth even holding bonds. So then the market would reset the value of bonds much, much lower, and then everything that's with bonds stuffed in its balance sheet, including every bank in the country, would collapse. It wouldn't work.
Gold's recent weakness may seem confusing, but it could be part of a broader reset in the financial system. The issue is not only today's gold price, but what happens if gold is officially revalued far higher. Rafi Farber, a respected precious metals commentator known for connecting gold, bonds, inflation, and monetary policy, argues that a dramatic gold revaluation toward $20,000 to $30,000 would not be a simple bullish event for markets. Such a move could crush bond values, as existing interest payments would become meaningless relative to a higher gold standard. To attract buyers, yields would need to rise, forcing bond prices lower. Since banks hold bonds across their balance sheets, that reset could pressure the banking system. Gold is not falling because the endgame is over, it may be moving before a deeper monetary shock. Now we present the clips from Rafi Farber's interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you, and enjoy the video.
If gold is revalued to 20,000, 30,000 by statute, then the prices of bonds collapse because the interest that they pay becomes almost meaningless. You have to bring up
Right.
the interest to have it be worth even holding bonds. So then the market would reset the value of bonds much, much lower, and then everything that's with bonds stuffed in its balance sheet, including every bank in the country, would collapse. It wouldn't work. And people say, like, well, why does the price of gold affect the price of bonds at all?
Right. Right.
It's hard to explain it in a way that makes sense to people. I can explain it this way. Like, at the issuer of the dollar is the Fed, and what does the Fed have? The Fed has a certain amount of gold or gold certificates representing the gold that's in the treasury, and then on top of that, a whole bunch of bonds.
Right.
So if that balance sheet balances itself with assets and liabilities. The dollar's a liability and the assets are the other side of it. If the value of the gold in the balance sheet goes up, then the value of the bonds on the balance sheet has to go down to balance. Right? That's how the balance sheet works, because those assets have to balance out the liabilities, and that's the dollar. That's the Fed's balance sheet. So if one goes up, the other must go down. If
Okay.
bonds go up in value, then relatively the value of gold goes down in purchasing power. But if the value of gold goes up in purchasing power because you're revaluing it at 20,000, 30,000, then the value of the bonds have to go down. But they don't only go down in the Fed's balance sheet. They go down everywhere because an asset is an asset. It doesn't matter who's holding it.
Wow.
And
Okay.
then
Yeah,
then the,
that's
then
a great
the yeah.
explanation.
That's the best I can do. It's hard to really understand the logical connection between gold and bonds. There are two derivatives removed, right? The immediate derivative is the dollar itself, and the debt is a promise of dollars, which is a derivative of the derivative, which begins with gold because the
Hmm.
dollar began as a gold credit, and it still is with debt on top. A bond is a promise for dollars, which is a promise for a certain amount of gold that can't be fulfilled. And
Hmm.
when people realize that it can't be fulfilled, then the balance sheet balances at whatever price of gold per dollar would balance the Fed's balance sheet, which at this point is something like 40, $50,000. That's when, if you assume the amount of gold on the Fed's balance sheet is actually there, the amount of that gold equals the amount of other assets on the balance sheet. If you zero those out, right? Here's another. This is also another way to understand it. In 1980, right, when gold hit 850, the value of gold in the Fed's balance sheet was the total market cap of gold on the Fed's balance sheet equaled the market cap of everything else on there. That was
Wow.
100% backing of gold of every dollar on the balance sheet. So again, you see, if gold goes up, the bonds have to go down. If bonds go up, or the market cap of bonds go up, then the value of the gold has to go down. That's what happened in the gold bear market, right? When the Fed was reinflating all the bond market, so the value of bonds go up, interest rates go down, and then gold goes down. People think that, oh, if interest rates go up, gold goes down. It's the opposite. When interest rates go up, when the value of bonds go down, that's when gold goes up. It's not 100% linear, but that's what always happens ultimately. I don't believe in gold manipulation in the same way that a lot of gold bugs do. I don't think it's a conscious process controlled by a cabal who understands that gold is really dollars is really
Right.
credit and gold is really money. I don't think anybody really understands this. I think it's an emergent property of an inflationary system where it looks like gold is manipulated, and you can point to certain spoofing that J.P. Morgan does and say, oh, they got fined $2 billion, blah blah blah. You can say that and find, okay, fine, that exists.
Right.
But the ultimate manipulation is the existence of the futures market and the existence of an unbacked dollar itself. That's the manipulation, and everything else happens organically from there, and that it'll fall organically too. And no one will be responsible for saying, okay, I'm going to kill the dollar now. It's going to be an emergent property, just like your immune system when you're fighting a disease, right? You're not saying, you don't wake up in the morning and say, oh wow, I have a cold, and then you say, immune system, go for it, and then you like you're directing it. It's an emergent property of your body,
Right.
right? So the gold and the dollar, the relationship between them might not be consciously understood, but if we are all cells in a huge homunculus or a monetary circulatory system doing our little jobs, right? No single cell in the immune system knows what it's doing. It's just doing a job and connecting to the rest of it. So it'll all emerge as it will uh, be understood logically at the end that gold was money because the dollar will be worthless and gold will be traded directly. And then people will say, well, how
Wow.
did that happen? Well, gold must have been the money the whole time. Well,
Right.
yeah. My final thought is well, a lot of people have been contacting me lately. Why is gold going down? It's going down. You said the end game's coming. It is. It is. And this is not a game of using gold and silver to increase our dollar holdings. They say to me, "Well, I had $500,000 in January. Now I only have 300,000 because gold is down, and now I have fewer dollars." I'm like, "Yeah, okay. Well, you have your gold represents fewer dollars, but you're still on the right track. And if you stop trying to make dollars, and I understand you have to play the game. I told you I play the game a little bit too,
Right.
but I'm
Right.
not that concerned with it. I'm really not that concerned with it because I
Hmm.
still understand what's happening. So just understand what's happening, understand what the realities are. And then this is the more people that contact me, the closer I know that we're getting to a bottom. And believe me, when it reverses, everyone's gonna be like, "Oh, Rafi, you're a genius. You knew this was happening the whole time. And how did you get this all right? How do you know everything?" I
Right.
don't. I just know what the end is.
Right. Right.
So calm down, take it in stride, and stay happy and cheerful.
The gold price today remains at the center of a broader monetary debate, especially as more investors consider a possible gold revaluation toward $20,000 or even $30,000. The main point is that such a move would not only lift gold prices, but could also expose deep weakness in the bond market and the banking system. A respected precious metals commentator explains that if gold is marked to market at dramatically higher levels on official balance sheets, bonds may need to fall sharply to keep the system balanced. Existing bond interest would look too small, forcing yields higher and prices lower. Since banks, institutions, and the Federal Reserve rely heavily on bonds as assets, a major reset could put pressure on the entire financial system. This is why gold, bonds, inflation, the dollar, and silver prices today are all connected in one larger monetary story for serious market watchers. Let's get back to the interview.
After a big spike like this that we saw leading up to January, silver 110, gold 5,600 or something like that.
Hmm.
You know, the reason that gold and silver go up is because the monetary unit, the credit unit, which is the dollar and all the other derivatives of it, is dying because of the monetary inflation of the years before. And that's what was happening also in 2007, 2008. And all of a sudden in March 2008, gold topped out at 1,000. I think it was the first time gold hit 1,000, and like all the gold bugs are like, gold's going to the moon, $1,000. We're gonna have 2,000, 3,000, 4,000, 5,000, and then it just went down to like 680 by October
Right.
31st, 2008. And so what? So the move down in gold and silver started in March that year and ended in October, and then the real stock market crash and the real asset price crash didn't really get going until late September. I think it was September 28th was the first really big spike down in the S&P and the Nasdaq.
Hmm.
So is that what's happening now, or is this a new bear market for gold and silver? Well, I doubt that it's a bear market for gold and silver, because I mean, so many reasons. I mean, the main one is that I mean, debt is just going parabolic everywhere. It's not increasing as it keeps increasing faster and faster and faster. It's $1 trillion every 20 30 days now or something like that. Is that
Yes, it's
is that
crazy.
is that right? So that can't stop. If that stops, then asset prices crash. So we're in the terminal phases here. So the question is why are gold and silver dropping now? Well, why were they dropping in 2008? It looks like there's some kind of problem in the monetary pipes somewhere that is going to spit. We're seeing in Bitcoin too. I mean, I'm not a believer in Bitcoin at all, but I still believe that people put dollars in there wherever there is.
Right.
And well, no, when they're getting greedy and they have extra dollars to put into imaginary things because they want to make more dollars. So
Right.
that's going down, and this is going down. The only remaining bubble left seems to be AI. That's the only thing that's not going down. So when we see that going down, well, I think we'll know that we're in a financial crisis, and I don't see proof of that yet. But if you remember March 2023, nobody was predicting any of that. Like nobody was saying regional banks are going to crash tomorrow, or they're going to crash in March. Nobody saw that coming at all. Like in 2008, you could point to a few people who were saying, "Oh, there's going to be a crash. There's going to be a crash. There's going to be a crash," and they were right. Nobody was saying anything about March 20. Nobody.
Yeah, nobody.
So there's going to be something, and when it happens, they're going to print more, and when they print more, there's going to be another slingshot in gold and silver, and I think that'll be the last one. People often criticize me, and I admit it. You know, I understand the criticism, and it's valid. They keep saying that I say, the next thing is the end game. After this happens, it's the end game. After that happens, it's the end game, and it keeps going, 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 and it's frustrating. The thing is, I don't know the domino that's going to cause it.
Right.
What my thesis is that there's only going to be one more financial crisis. I don't know exactly when that starts, but when it does, it's going to lead to the last printing round, and that will be it. That's my thesis. If I'm wrong about that, then I'm really an idiot. I mean, the cracks have been forming for a very long time. The only question is when does the crack become big enough that people can't ignore it anymore? And if I once thought that Bitcoin was going to be the last of the bubbles,
Yeah.
but apparently now there's another one after Bitcoin. And when the next bubble can't inflate, when there's nothing else to catch those dollars, and they go back into commodities and actual goods that people need to survive, that should be it for the currency. And then you just start trading commodities for commodities because money is nothing but the most liquid commodity. Credit is built on top of that. And when credit dies because it no longer represents money, then you got to go back to money. You got to go back to trading commodity for commodity. That's what barter is. And money is just barter of the most liquid commodity.
Hmm.
People have lost their connection to that reality since the 1930s and 40s. That was like the last vestige of it. But you were saying that this generation trusts in government. Well, and we haven't lived through a depression. Well, that's because the central banks can bail us out of every depression to have to deal with it later.
Right.
It's not this inflation hasn't been building up since the 70s. It's been building up since 1933. We're almost at 100 years now. How much longer can it last? I don't think it can. Just judging by the sanity of the young generation, which is quite low, and the disconnect pretty much from every aspect of the planet. Like the people sit, look, I mean, look at us. We're having a conversation, but not really having a conversation. I've never even met you.
Right,
I'd like
right,
to,
right.
but it's but we lose human connection,
Yeah.
and I don't see the human race surviving much longer without actual human connection, which is getting more and more diluted as the money's getting more diluted. It's all the same equation everywhere. And coming back to Earth, hitting ground again is going to be painful for many, but it's unavoidable. And the question is just when. I mean, when is the regional banking crisis? I don't know. It just happened over the weekend. So
Hmm.
can something like this.
Gold and silver's recent pullback should be viewed as part of a wider monetary cycle, not simply a failed rally. After major spikes, markets often shake out weak hands before the deeper crisis becomes visible. The 2008 pattern shows how metals can fall first, while the real stock market and asset price damage appears later. The bigger conclusion is that debt expansion remains the core driver. When credit grows faster and faster, the system needs constant liquidity to keep asset prices alive. If that liquidity slows, bubbles begin to break. Bitcoin has already shown weakness, and the AI bubble may become the final signal if it starts to unwind. At that point, the Federal Reserve may respond with another major printing cycle, creating the kind of slingshot move that could push gold price today and silver price today into a much stronger long-term breakout. This is why short-term drops should not hide the larger story. Gold and silver remain linked to inflation, debt, the dollar, and trust in paper assets. The final reset may not come smoothly, but real money could matter more than ever during the next monetary reset cycle. Share your thoughts about this interview in the comments section below. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell icon. Thanks for watching.